In this video, I'll reveal everything you need to know about how to trade using trend lines combined with RSI. It's one of the most effective ways to spot reliable trades in trending markets, especially when price pulls back. This powerful combination helps you catch continuation moves with confidence. And in the next video, we'll cover how to use this combo to spot breakout opportunities. But for now, let's focus on trend continuation. So, here's what you'll learn in this video: how to properly draw trend lines that align with RSI signals, how to use the RSI to confirm continuation setups at key trendline levels. So without further ado, let's get on with the video. What are trend lines? Trend lines are basically dynamic support or resistance levels that show up when the market's trending. We draw them to get a cleaner picture of where price might react, and when price pulls back to them, it often sets up really solid trade opportunities. Now, usually when price hits a trend line, one of two things can happen. Either it bounces and keeps going with the trend, that's a continuation, or it breaks through and possibly flips direction, that's a breakout. In this video, we're just going to focus on the continuation part. We'll talk about breakouts and how RSI helps confirm them in part 2. How to draw trend lines the right way. Alright, let's talk about how to actually draw trend lines in a super simple and effective way. One question that comes up all the time, especially from newer traders, is where exactly should I draw the line? On the wick? On the candle? The close? Here's the deal. You want to draw your trend line in a spot that gets you the most clean touches. That's what really matters. It's not about being perfect, it's about being practical. Let me show you what I mean. In this chart, we've got an uptrend. Price is making higher highs and higher lows. Since it's an uptrend, you want to draw your trend line under the trend, connecting the swing lows. Then you adjust it just enough to line up with as many touches as possible. Now, yeah, you'll see some candles might overshoot the line a bit or not touch it exactly, and that's totally fine. Because trend lines, just like support and resistance, are zones, not exact price levels. Let's look at a downtrend now. Here, price is making lower highs and lower lows, so your trending goes above the trend. Just do the same thing. Adjust the line a bit so it lines up nicely with the price touches. That's it. Simple, right? What's a continuation setup? Now that you know how to draw trend lines the right way, let's talk about how to actually use them in real trades. Alright, so what's a continuation setup? It's when price pulls back, taps the trend line, touches the trend line, and then bounces right back in the same direction as the trend. But here's the thing. Just because price touches the trend line doesn't mean you should jump in right away. That touch alone isn't enough. You still need some kind of confirmation. That's where RSI comes into play. We use it to help filter out the weak setups and lock it on the ones that actually have potential. Let's say you're in an uptrend. Price pulls back to the trend line, RSI draws below 30 oversold zone, then it crosses back above 30. That's your first sign that buyers might be stepping in. Now if price also gives you a strong bullish candle, like a bullish engulfing, a green candle that completely covers the previous red one, or even just a clean bounce of support with a nice long wick underneath, that's the extra confirmation you want. Bonus: add a mini trend line. If you want a little extra confirmation, you can also draw a mini trend line across the pullback. Once price breaks above the mini trend line after the RSI bounce, it adds even more confidence to the setup. And at that point, yeah, that's a trade you can feel good about taking. Quick example: uptrend. Let's walk through a quick example. You've got an uptrend, You draw your trend line underneath. RSI dips below 30, then climbs back above. A strong green candle shows up right off the trend line. That's a clean continuation setup, simple and solid. Now flip it, downtrend. Same thing works in reverse. In a downtrend, price pulls up to the trend line, RSI pushes above 70, then turns back down. You see a strong bearish candle, maybe even a bearish engulfing. A big red candle that fully covers the previous green one. Optional. Draw a mini trend line over the pullback and wait for a breakdown, just like we did in the uptrend. Either way, once everything lines up, that's your signal to take the short trade. This combo works so well. A lot of traders use either trendline or RSI by themselves, but the problem is that usually leads to weak setups or even false signals. When you put the two together, you're combining market structure with momentum, and that's a powerful mix. It helps you stay out of low-quality trades and gives you way more confidence when you actually enter a position. What's coming next? In the next video, we'll break down how to use this same combo for trendline breakouts. So definitely check that one out next. Alright, so I just showed you a few simple ways to trade using trend lines and RSI stuff you can start using right now. If this video helped you out, just do me a quick favor. Like this video and subscribe. Takes just a second, but really means a lot. And if you're into this kind of content, make sure to check out the next video too. It's all about spotting breakouts with RSI. Thanks for watching and seeing you in the next one.